show. Just came up from the beach. Tried to go on a stream here. Technical difficulties. It was not live at all, so apologies for that. We are on that cottage rural internet. Apparently, they're going to be upgrading to fiber soon, but currently it's the slow stuff. I just had a great week in the last week. Not so much in the stock market, actually. I've not been doing all that well the last week. But again, I don't focus on the short term. I'm focused on the long term, and long term in a lot of great opportunities that will pay off before expiration. But yeah, it's been great. I was on the beach today, had an awesome nap with my youngest daughter, my third born. It's just been great. It's a slower pace out here. Going for walks with the dog and my oldest daughter on the water every night, and just spending the days, on the beach and be surrounded by nature. It really helps me, sort of hone in on the things that are important in life. And I could really see myself retiring in like, this is a tiny cottage we're staying in right now. It's got 2 bedrooms. So I sleep in one room with my daughter. There's 2 beds in that room, and my wife sleeps with the newborn and our middle child. So we're making it work. We got a big common area, dining room. Everything's here that we need, and we have a big dog, 3 kids. Like, talk about tiny house living. I think this cottage might be, what, I don't know, 700 square feet maximum. And it's no problem. It's doable. We spend most of our time outside and just enjoying things. And it's gonna be a huge change to my new place. We have closing September 1st, so that'll be exciting. Huge shift from being a tiny cottage to being something much, much bigger. So stay tuned for that update. But I've just been really enjoying this summer, being disconnected, being far away from all my rentals, far away from all the headaches, having to be forced to outsource things. It's fantastic. If you're watching right now, just jump in the comments, say hi. If you have any questions, shoot them in. If no one has any questions, say I'll rant for the first few minutes, give you guys a chance to get the notification. I know I sent out 2 notifications, or maybe even 3, trying to go live tonight, so people might be clicking on all 3 of the links. It might be confusing. I'll try to delete the old streams after. I don't know what's up with this, with YouTube, or it might have been partly YouTube, it might have been the internet, probably a combination of the 2. But yeah, it's been a wild ride. I really wish that, I almost really wish that I could live on the water all the time. Someone says you shaved. That consistent with your vow? No, so I haven't shaved at all. I just can't grow any facial hair. I'm not a real man. This is it. This is to be true to you guys. This is literally, that's it. That's all I get. There's just not much there. You shaved? No, I did not shave at all. This is literally just all I can grow in 3 weeks. I'm of European descent, and it's weird. Like, my dad's got a super thick beard. My grandfather doesn't, so it just kind of depends, I guess, on what random gene pool you get. This is the gene pool I got, so in some senses it's really nice. Like, I got super legs for some reason. I don't know why. Like, my legs are hairy almost as like my chin. Not that bad, but but my arms, I got like 0 hair on my arms, which is kind of cool. I know some guys like shave their arms or whatever. I don't have any back hair, none of that. So there's some nice things about but not being a hairy guy. But anyway, I usually keep it shaven anyway. This is like as gross as it's ever gonna be until I'm back to break even, and I'm not. TV has the update since the new egg short. I gave up on the new egg short. I closed out most of it. I still have some puts that I sold, which I'm hoping expire out of the money. They're like 17.5 and 20, which I'll probably get assigned all those shares of Newegg now, which sucks. But you guys know the strategy. We run the wheel. So as soon as I get assigned, and not until, I will start selling calls covered on the shares that I get assigned from those puts. And the call premiums pay fairly well, especially on a really good up day. You could sell way into the money and make 2, 3, 4% a month annualized until your shares are taken away at break even or a slight profit. So that's the way we roll. That's the options wheel. We wait until we get assigned on the puts, and then we sell calls on it. And that's it. That's the way we play. I'm focused on the long term. The new egg short was getting away from that vision, and that was just playing around and having fun. That isn't, those experiments ended up blowing up my account. And so let my learning lessons and my failures be education for you guys to help you grow and not make those same mistakes. I think it's very, very doable to just go on the open market and set up some stock screeners where you watch like the top 600-700 companies, and whatever's down that day a lot, then you look also if the options premiums are, because it's weird. Sometimes like GM today was down like 10%, General Motors, but their options premiums were not that out of whack. Whereas other companies I saw were like 4% down, and their options premiums were like 300-400% up, right? So sometimes you can really you can really lean into certain stocks that are great companies with a lot of good value. Long term, you want to hold them, and you can sell, bull put spreads. The reason I say spreads is because the reason you sell a put and then you buy a put, for some safety, is if the market actually does go into free fall collapse and we have a 30% pullback, you want to have some gunpowder, and those puts you bought are your gunpowder. Most of the time, they're just going to expire worthless. They're going to cost you a little bit of your profit. So instead of maybe a 40 or 50% annualized on that trade, you might do 30% annualized on that trade, but you've got insurance. And insurance is super, super important. So practice what I preach, not what I do. The current position of where I'm at, today was a down day actually. So I didn't do that well today. I got kind of destroyed on my a few companies that I'm holding. They're just down right now. So I'll likely get a sign, which is fine. I want to own shares anyway. But we'll see. It might bounce back tomorrow. You don't know. Right now I'm compared to where I was in May inside the options trading account. So just in the options trading account that I shorted Newegg, and then it blew up my account. In that account, I'm down. Let me use quick math here and find out what I'm down. So I'm still down 270,000, I think, from where I was in May, and even further down from my all-time highs on that account since March. But it's coming back slowly. We're making some good headway. There's still some losses. Worst case scenario, I'll have some losses at year end that I get to write off against other gains elsewhere, and it's all good. You get half. Well, depending on how you claim it, you can get a quarter to half of those losses back in tax deductions. So it's not the end of the world. I trade inside of a corp, so I could pass those losses on to myself personally or whatever. So there's lots of options there. Long term, it's going to be a blip. Like, a year from now, it's going to be like, oh, cool. I was down $1.5 million on Newegg. Now I'm up, that whole $1.5 million plus 500,000, right? Because I've got that long-term focus. I'm not going to let it wipe out any of my accounts. Always live to trade another day, focus on risk management, and invest in long-term plays, right? I'm a fundamental investor, so I like to look at, earnings per share. I like to look at, sales. I like to look at those things relative to previous quarters. So is it growing? Is it declining? Et cetera, so forth. But fundamentally, Newegg made no sense I think I started shorting at $25 a share using calls. But it made 0 cents at 68. Unfortunately, I didn't know how rational the market could be, and I thought, better be safe than sorry. So I hedged the hell out of that position to avoid blowing up my account. Once I got margin called, that kind of forced a $700,000 or $800,000 loss, and then it got worse. And so I wished I could have just, if I'd stayed with a tight spread, if I had, bought and sold a call at the same time, created a really tight vertical spread, I would have made lots of money on that trade, and it wouldn't have blown up my account. But I did naked. I did a naked call without buying a call to protect myself. I sold a call. And so that's a naked trade. Very dangerous. Stay away from that stuff. I don't even want to own shares in companies without covered calls on those to juice up the returns. Like, owning shares in a company is like, that's boring to me. Like, I can sell calls, which means I can agree to give my shares away at a said price and get a return for that, which I'm cool to give away. Like, let's say I own shares in Bank of Montreal, and I could sell right now, the right to sell at $130 a share, which is cool because that's higher than the current price. And I can get paid to do that every week. I can write weeklies or monthlies and get paid 1% to 2% a month. It's like lending your shares out, but you get to keep the shares. They only get called away if there's a huge profit. That's the only way you lose. In which case, like, who cares? You got a small profit instead of a big profit. Better to get consistent returns. I like that strategy a lot. I like running the wheel. It's my favorite of all the strategies with the long-term focus. I don't, you guys know I've talked on this channel for almost 4 years now, 3.5 years, about the importance of not being a stock picker and riding the market, because very few traders actually especially if you have a lot of capital. If you have a little bit of capital and you have a good strategy, you could outperform the market for 10 or 20 years. There's lots of traders who do. With an account size of less than like 25 million, it's very easy to take those trades that have very little liquidity and make huge returns. But as any hedge fund or mutual fund manager knows, with billions in capital, it's very, very difficult, net of fees is important, net of fees, to outperform the market. So the S&P 500 since like last fall is up 30% right now. So if your investment portfolio isn't up 30%, you should have just bought the S&P 500. In hindsight, I probably should have just bought the S&P 500, but hopefully over the long term, I'll have better tax advantage, actively trading, a little bit of fun doing it, better liquidity and better control over my investment, because you can, with options, you could theoretically even just trade the S&P 500, pick like an ETF like SPY and just sell, bull puts on it. And if you do get assigned, bull put spreads on it, and if you do get assigned, then you start selling calls on it, right? And you could define your max loss. So you could own the S&P 500 at these prices with a stop loss that if the S&P drops more than 3%, that's okay. You're capped on your loss. You can't lose any more money. You buy a put, you sell a put at the same time, you create a spread. So if the S&P 500 goes up, you make money. If it goes down, you're stopped out. That's it. You can't lose money. So if there's a major recession, you're stopped out. You're in cash. You're good. Like you got your put there, protect you. You can close the trade out and you're back in cash. You're good to go. You have gunpowder ready to go. So that's what I love about options trading, is that it allows you to, and what you want to do is ride the market but with less volatility. Over time, invested in the stock market, every 6 years your money will double. And between 5 and 7 years, your money will double. In real estate, you can double it a lot faster, no doubt. Like anyone coming on here being like, Mike, you're hating on real estate. No, I love diversity. I think you should have a stock options portfolio, a long-term stock portfolio in your tax-free savings account to let it grow tax-free. You should also have a real estate portfolio, probably, or invest in some way in real estate, even if that's through REITs, or if you don't want the active work, still get some exposure to real estate. It's a fantastic asset class for wealth preservation. And on the active side, you can build a business around real estate and make fantastic money with limited downside risk. And that's what I love about building a real estate business. I keep talking about that on this channel. I don't want a real estate business anymore. I'm at a chapter in my life where I don't enjoy fighting with trades, fighting with tenants, even managing property managers or GCs, actively hunting for the deals and then grinding to unlock that value. Buy and hold real estate, if you just bought at market, basic property that needed no work, fully turnkey, and you put property management in place that's really, really good property management, you pay them top dollar, they hire top dollar trades, everything runs super smooth without your involvement, there'll be very, very little cash flow. Your return on investment, even if you're 20% down, is often like 10, 12%, which is worse than you can do levering in the stock market. So buy and hold real estate without any of the active business components. Like if you actually make it into passive, it doesn't have the same, return. So that's for those people on Instagram who's been following me at Mike Rosehart on Instagram and reaching out and being like, Mike, you've been super, bearish on real estate. That's not true. I'm still actively flipping right now. I still have a lot of buy and holds. I believe in real estate. I always have. It is overvalued relative to people's income, relative to, many different indicators. It is overvalued. But we're having a bull run on immigration here in Canada. Canada is taking in a lot of people. That will create a inventory shortage, which could push prices higher. Also, I believe that real estate prices are relatively sticky, in that I believe the government would step in before we saw more than a 10 or 20% pullback. So the chance of losing money in real estate, very low. So it's a great wealth preservation sort of vehicle, but it should be 1/4 of your net worth, unless you're building a real estate business, in which case, if you're actively finding deals under market and putting in your time to ensure those deals get realized to the new comparable properties. So maybe that means renovating it. Maybe that means, getting bad tenants out or fixing problems with the property or dealing with city issues, rental license issues, whatever the problems that lie within this property are that you can fix. If you do that, then your capital will grow at triple digits. Like there's no reason you can't take your down payment and double it every year doing active projects. You probably triple, quadruple your down payment. Over a 5-year span, I did like 8 times, like 800% return using real estate. But I actively invested my time to ensure I didn't lose money on those projects, to ensure that I made those great returns. And I'm just saying, out loud here, my time's too valuable to be doing that. And even if my time wasn't that valuable, I don't want to do it anymore. And so that's why I've pivoted. I have a way more capital than I ever needed to retire early. Like when I retired end of 2016, I didn't retire until 2017, February or March, I think. The whole retirement, I guess really I didn't really retire until 2018. Like I was actively grinding even throughout 2017. I took some sabbaticals, but actively grinding, right? So, and I've been through tons of periods of active grinding. Even in 2019, I had a period of super hard grinding. If you were watching, you knew how I oversubscribed to a lot of different, projects that I took on. So anyway, point being, it's been a grind, and I've made a lot of money doing it, and you can make a lot of money doing it too. Real estate's a fantastic vehicle to build a business around to make a great return. So if you value your time, if you make less than 80 grand a year, real estate's for you. If you want to actively work at it and build a business in it, you can make even 7 figures potentially growing a real estate business around wholesaling or around fix and flipping, or around even the BRRRR model, which is basically flipping, but you're keeping the property after and cash flowing it. Now, the holding it doesn't make sense in my market, but there are markets that it does make sense in. Yeah. Okay, let's do some Q&A for you guys. Hey, Andrew. Hey, Seema. Jeff, how you doing? Troy, yeah, I got your question already. Thanks for the baby face comment. Do you prefer US or Canadian ETFs? So Jeff, like depends on the currency you're investing in your account. So if you're a Canadian account, then having Canadian dollar currency exposure is preferred. There's less tax complications with that, probably less even just risk associated with having to hedge against, like, what if the US dollar just tanks in value? Then your investment would be screwed if you're trying to retire in Canadian dollars, right? So you want to hedge for currency, but it really depends on where you are in your journey and that. So I think I like US ETFs better for options trading because the liquidity is way better. There are just 10x people investing in US exposed ETFs. So I like the US ones better only because when the market's irrational, and this S&P 500 as an example is down 2% on the SPY, options market, you look at the options wheel, you'll see some strike prices where the premiums are up 100 to 200%. On a 3, 4, 5% drop in the S&P 500 on a really bloody day, you'll see some really juicy premiums, which makes no sense. Like, you shouldn't be able to now write contracts to guarantee the price of the S&P 500 that pay 300-400% higher. It should be proportional to the, somewhat proportional to the drop in the actual underlying price of the S&P 500. But there's, and that's why I talk about liquidity being a big piece in the strategy. Large funds can't do this. Large hedge funds can't take $1 billion at some of these strike prices. There just aren't enough contracts changing hands. So someone like me could go in and do that with a small amount of money, but a large fund with billions of dollars can't get those same returns. It's just not possible, right? So sometimes it's crazy. Like on some of the stuff with really bad volatility, I might put an ask in at like $1 and the bid's at 10 cents. And sometimes, like, just for a quick second, someone will buy my stuff at $1, even though the spread between the bid and ask is like 1,000% in some cases. On some of the really wacky trades, 1,000% off. But sometimes the market will get irrational for a second. Someone will buy that contract I'm trying to sell at 1,000% premium, which makes no sense. I don't know why someone would do that, but just like lack of liquidity, right? And so that sort of exposure can be to your benefit, but if you're trying to get out, it could also be to your detriment. So it really depends on your strategy, but I prefer US ETFs to Canadian ETFs for that reason. But I could see how someone trying to invest Canadian dollars and retire in Canadian dollars and looking for passive income in Canadian dollars would at least want a Canadian hedged, or I guess if they're going to own US ETFs, buy a Canadian hedge. Or there probably are already ETFs that'll follow the US market that are already hedged for you. There's a bunch of them out there, I'm sure. I don't have the names off the top of my head, but I know they exist. So just do a Google search and you'll find them. Yeah, good question. Next question was, yes, friend, live on the water and get an e-foil. I don't even know what e-foil is. I'm scheming to borrow against stocks to buy a house. After that, you borrow against the house with a line of credit. Thanks so much. Yeah, so if you had $1 million, let's say you had $1 million in stocks, blue chip quality stocks, you had some, bank stocks, whatever, like, well, just pick some stuff from the S&P 500 blue chip stuff. If you took $1 million in shares, brought to Interactive Brokers, they'll lend you 70% loan to value. So in theory, your $1 million could borrow you $700,000 if you maxed out the line of credit. Don't do that, because if we have a recession and you haven't insured your entire portfolio with puts, then you're going to get margin called. If you have insured your whole portfolio, fine, borrow the whole line of credit. If you bought puts on all your positions for like a 5% pullback or more, you're in the money if anything crashes. You could afford to give up some of your return for that. Then you're fully insured and your stock portfolio is insured. Be my guest, borrow against it. But I'd probably borrow maybe 40-50% if you're not going to insure your stock portfolio. If you don't have those, or at least have some fair trades set up so that if the market drops, you can liquidate those trades that do really well in a recession, on those companies that do well in recessions, those plays that do well in recessions, and then boom, you've got liquidity to cover against a margin call and cover the shortfall on your margin line of credit. Your margin line is basically you borrowing against your stock portfolio. So yes, you could borrow against your stock portfolio. You could put $1 million in, borrow 700,000 out, buy a house with that, refinance that house, get the capital back, pay back your stock line of credit. And you could have a house now with a mortgage on it, and in theory, pay back the whole stock line of credit and have that line of credit to go again for another rental property and continue the process on and so forth. It's actually more conducive to the bank, to the financing process if you have other investments. The bank likes to see that you're not all in real estate. Like they want to see you have a stock portfolio and that you have the other diverse, classes of assets. They don't like someone who just has real estate. I know personally, they told me like, hey, Mike, you need to diversify. You have too much real estate. I'm like, fine. Like I'll listen to your advice and I'll diversify. And I built a stock portfolio, et cetera, so forth. That actually helps you to build your real estate portfolio. So they are very, the two do help each other as you grow. And I think that it's good to have different asset classes. What if real estate acts like it did in 1989 in Ontario? In Ontario from 1989 to 1998, if you bought a house in like 91, 92 in Toronto, by 98, 6, 7 years, we see huge pullbacks in real estate. Like in 2008, we weren't affected. We have, there's recourse for non-recourse mortgages as well as a number of other things that come into play. But basically, suffice it to say, there's a lot less risk in Canadian real estate, which means that the prices are stickier. Anyway, my point being, we could go through that again. And if we went through that again, you could buy a property now and in 6 years have zero appreciation. How does it feel to make $200 a month in cash flow for 6 years and no appreciation and deal with all those headaches of owning a rental property when you could just invest in a stock portfolio using some leverage, build a dividend portfolio that cash flows better than a rental property buy and hold? That's what I'm seeing right now in the current market. And I'm like, we may go through that. That said, the immigration numbers could come to fruition that they're forecasting. Trudeau could, allow millions more to immigrate into Canada, and we could have a huge shortage, in which case prices will continue to go way out of whack relative to average income and a number of other factors that it currently seems, I don't know. I don't have a crystal ball. For sure, I think that I will continue to hold some real estate and, focus on aligning all of my goals together. And one of those goals is more time with family, more time on the beach, more time to really, focus on those things that matter most in my life, which, it's like health and fitness, growing my mind and my cognitive development and really, actualizing into the human that I want to be. Real estate is not really a part of that journey. It's a means to an end. If I can find another means to that same end, I might chase that path instead, right? Like private business ownership is just like real estate. In fact, you could build an Amazon business where you sell stuff or buy some company. You could buy a company that sells like widgets that makes 500 grand a year on 1 million sales with a huge profit margin. Those companies exist all across Ontario, and the bank will finance you 80% loan to value. I'd much rather buy that than $1 million property that probably cash flows $1,000 a month or $2,000 a month or $3,000 a month, right? Like there are $1 million businesses you could buy the same price as real estate that cash flow 10x better. So there's risk with that too, whatever. But that's my point, is that real estate is a great asset class, but it's not the only asset class. And anyone who says that real estate's everything and that stocks suck or options suck, it doesn't have a wide understanding. They haven't really studied in depth people in each field who are crushing it. Find people who are crushing it in stock option trading. Find people who are crushing it in real estate, who are crushing it in, Amazon FBA, or find some person who bought a business and learn from all the different aspects, and you'll see that each one has merit in and of itself. And I think the diversity is the key. Next question was, thank you for your time. Thanks, Colton. Appreciate you jumping on. Anyone who's jumping on tonight on the stream, I appreciate your time. Thanks for doing these live streams, Mike. I love your insights into everything financial. Thanks, appreciate that comment as well. Danny says, hey Mike, what are some of your biggest life lessons outside of business? So outside of like real estate and stocks. Well, most I talk about personal finance on this channel, so most of my learning lessons are around that. But there's some lessons I think around, choosing a life partner and waiting until you're at the right maturity to do that. I think a lot of people rush into things. There's some huge value in waiting to get married and waiting to have kids as long as possible, especially if you're a man. Men peak out at 35, just saying. I don't know yet. I'm nowhere near my peak yet, but that's some general life advice, I think. I think university and college for a lot of people is overvalued, and oversold, and over talked about. I think that there's a lot less value than, maybe our parents have pushed down our throats. I think there's actually a lot less opportunity, and that people could spend the 4 years getting the same education on Google or through other means and platforms or actual real life experience and be further ahead and have more money and a better paying job. So, I'm not necessarily saying don't go to university or college, but I think there's way too many people that I met going through school and going through university that don't need to be there. Like, if you want to be a scientist, okay, fine. Like if that's the thing you want to be, or like let's say you want to be like I don't know, like a philosopher. Okay, fine. Go to Western, go to U of T, pick a university that's prestigious or whatever, and study philosophy, and then get a master's and PhD in philosophy and do that. Okay. Majority of people go to school because they want to get a job, and they're like, I don't know what I want to do. I need to get a job. And then they end up going through the 4 years and they still don't know what they want to do, and they can't get a job. And now they have $80,000 in student debt. And so they go to school again, or they just find a job that they hate and they work in that job when they could have spent the 4 years being laser focused and, really be in a position where they'd be much, much better off financially in a job they actually liked. Maybe spend 6 months. You could do a 4-month co-op. You could do, 3 co-ops a year at 4 months apiece in different fields, like one in accounting, one in law, one in the trades as a plumber, electrician. For 4 years, you could do 12 different apprenticeships. That would be a cool program. If you had you could try 12 different apprenticeships in 12 different fields to find out what you loved. And at the end, you actually have real world freaking experience. You can actually apply to things versus learning about, hell, I took some stupid courses in university that have added, I took the health of sex and psychology in second year as a bird course, but added zero value to my life. I took some philosophy courses that maybe broadened my horizons in some way, but really I could have spent a few hours in a chat room with some philosophy majors and learned more than I did doing that whole course. There's a lot of wasted time. Oh, super chat. Hey, William. Thank you. William's always on here. Every single week I see him on in the chat, and he gave a super chat tonight. So thank you for that. If you've noticed, the ads are off. So completely no revenue at all. This is the only source of revenue, which is cool. Thank you. Mike, do you think that Robinhood will become another AMC or Newegg? If you're following me on Instagram today, you know that I was talking about Newegg on there today. So Newegg, sorry, not Newegg. Newegg is you're looking to talk about Robinhood. So Robinhood became an AMC or a Newegg. So Robinhood today was up 30% at one point. I don't know exactly what it closed out at. At certain points today it was $75, $76 a share. I think it IPO'd at 37, 38. So yeah, we saw a huge squeeze up today. A lot of that I think was fueled by Kathy Wood getting in, and from who runs the ARC fund. I think she got in and bought a bunch of shares. That was my brief understanding of what's happening with Robinhood. But I don't know. I was talking to a friend of mine today who he's also an options trader and an investor. And I don't know if Will's watching this, but hey, Will, shout out. He thinks the value's like $55 a share intrinsically. If you look at the just the balance sheet and the income statement. I haven't had a deep look into it, to be honest, so I can't comment one way or the other. But I think Robinhood has a huge critical mass of users, and I think that the value that they bring with their order flow is substantial. I do think they IPO'd a little bit undervalued. I was actually interested on IPO, but I wanted to wait and see what happened. I'll be honest, I did sell a someone just commented peak at 35. No, 35 equals 25 in 2021. Yeah, there you go. Men don't peak until, yeah, you're right. Financially speaking, a man peaks in his 50s, and men can be relatively healthy well into their 50s. So yeah, for finding a woman, women value, interestingly, we're in a little tangent here before I finish what's up with Robinhood. So what I'm doing right now is I did do a bull put spread at 49.50. So as long as the hood stays above 49, I make some money. But my max loss was $1, and it was paying 53 cents a contract. So probability speaking wise, it's almost impossible for me to lose money. There's just so much IV crush today. I couldn't help but get involved a little bit in Robinhood. And I also did sell a vertical call spread. So I shorted under 70 on Robinhood for, I'll probably close that out tomorrow. If we have a little bit of a down day tomorrow, I think we will. Almost always, this isn't always, but almost always after a big rush like that where we tested some bottoms and we tested some highs, and it bounced up higher than 70, but it bounced down. So I think that we may see a little bit of a pullback on Robinhood, maybe to 60 something dollars a share. I don't know. I actually have no idea about what's going to happen with that, but I did short it a little bit. I think it's slightly overvalued. I'm sure that in the next 3 weeks, 4 weeks that I wrote the contracts, that there will be a time where there'll be a pullback of 5-10%, and I'll make a huge killing when I cash that contract out. So I did short it, but I also did a bull put spread on it. So two spreads, max loss defined. So if Robinhood goes to $1,000 a share, I don't care. I've already stopped out. But if it stays under 65 bucks a share, then I make a huge payout. So, or not a huge payout, but a healthy payout. So I got involved a little bit with that, but I didn't bet a lot of money, just a little bit, have a little bit of fun. Yeah, so talking about peaking for a sec, Kevin, I like that. You know, men value in a woman typically, you know, it's like looks are number one typically for men, then personality is up there. Ability within looks is typically the ability for women to bear children and all that kind of stuff. Like men psychologically, when they're looking at a woman, that's what they're looking for. If you look at the studies, like all the top 5 things are always, aesthetic is always in the top 3. So men care more about looks. Women, on the other hand, don't look for looks than men. So you can be an ugly dude who's really financially secure with a lot of status and power and just be killing it with the ladies. So the most important thing as a man is, interestingly, status and power, but money provides, and then financial security. But money actually provides status and power. Like if you drive up in a brand new, you know, Tesla on the beach and like you can buy a round of drinks for everyone, you're Mr. Popular, you've got status and power really quick. It's easy to buy status and power. In fact, like in society today, money pretty much equates to status and power, but you could be like a 6'4" big jack dude and command, you know, status and power, and that will help you as well in the dating field, like when you're talking about what women look for. But what do I know? Each woman's different. Just biologically speaking, women are looking for a man that has status and power and security. That's what they're looking for, is the security that provides. So typically if you have a lot of money, and interestingly, when I started on this journey, I had no money, so I was like 0 in that category. I grew up like dirt poor. My clothes smelled like crap. I had like holes in my clothes. I was the bum frugal guy. I had 0 chance there. It's lucky my wife even, you know, showed any interest at all. It's lucky I had a sense of humor, which is number 3 on the list of things women look for, right? As a bit of a jokester and a kid at heart, right? That helped, got me some points. Didn't hurt that I have a, you know, a 6-pack, but I don't think that stuff really mattered as much as like the financial security piece. And maybe it's because my wife saw that I was extremely intelligent and knew that I was going places when we met. Who knows? But that is definitely a piece of it. And I think that as a man, or as a woman, you want to settle down before you're out of your peak, which is like 25 typically. For the things that men look for, women start going down after 25 typically, on average. There's always exceptions to every rule, but men peak out like 40. So like a 40-year-old dude should be looking for like a 30-year-old woman or a 29-year-old woman, to be honest, right? If you're trying to peak out on both stats. What do I know? Just like going off on a tangent. This is just like stats. It's just pure, like if you survey 10,000 women, 10,000 men, what you'll always find is that women are most attracted to, you know, financial security being number 1. Tied to that is power and status. You know, looks are typically not in the top 3, usually in the top 5. So the women do care if the guy looks good, but like looks are not that important if he has a lot of status and power and he's got a great personality. Personality is always in the top 3 for women, like sense of humor, like is he a great guy, whatever, but personality style that women like. Typically it's like sense of humor and a few other things. Intelligence is also pretty important on the woman's factor. On the man's factor, interestingly, intelligence doesn't even score in the top 3 ever. So if you're a super smart woman, that tends not to really matter as much to dudes. I guess we're judging with our eyes, but I hear men also judge with their stomach too, because, you know, a dude loves a woman that can cook well. So I don't know. What do I know? But yeah, you know, I think that's good life advice generally. If you're a man, you should probably wait to settle down until you're older. That said, financially speaking, the earlier you settle down, statistically speaking, the more wealthy you'll be. The longer you've been with your life partner, the wealthier you are on average. So you'll notice a common thread with people who get married early. I've been with my partner now for, I've been with Elise for 13 years this November. So I'm only 28. So we've been together a long time. I'll be 29 this year, but we've been together since I was 16. So that's a long time. I was definitely not at my peak then, right? I didn't want to get into this because like my wife could probably watch this and I'll get in like huge trouble. But like I could probably find a better mate now. Statistically speaking, I could find a lot better mate now because I can have pretty much anyone. When you have a ton of wealth, you can and a ton of time, and you can dedicate all that time and all that wealth to that single pursuit. You pretty much have your pick of whoever you want. If you put enough time and effort into something, you will succeed. Like I could get into great shape because I have the finances to spend all the time in the world focused on those interests. If there's a woman who's interested in freaking Shakespeare, I could read all the Shakespeare books and then I would be an expert on that and we could kick it off, right? So anyway, I'm just going off on a tangent here. I'm probably gonna end up sleeping in the doghouse tonight. I shouldn't be doing this, but like straight up, I'm actually about a second wife. Like if my wife's watching this right now, I'd be down for a second wife. Nice compound. I could see it. Like this, you know, ever watch the show Big Love? Fantastic show. Big Love. The guy's polygamist, has like 4 wives. It's an interesting drama. My wife and I watched it a while back, but she seems maybe open to it. I don't know. This probably isn't the place to break the ice, but I feel like a second wife might be, if you can financially support that. I mean, what's wrong with that? What's wrong with that life? More support for your kids, having another wife for your kids so they can have a better upbringing. There's just more maternal support there. The house is extra clean. You know, everyone just go on vacation, have a good time. More love. Love's meant to be multiplied, not divided. I gotta stop now. No, I mean, financially, I could easily buy a big compound with 2 separate houses on the lot, like my new house, and, you know, easily support another family. It would be no issue for me at all. I make 7 figures a year, but, yeah, I mean, emotionally speaking and that, I think my wife would have some challenges. Jealousy would be a big one I think we'd have to, work on. Could stock options be set up in an account like a brokerage? So yeah, I mean, John, to answer your question, and I did see your comment there, William. Good evening. John, yeah, you see open an interactive brokers account, and within the interactive brokers account, you could open a corporate account or a personal account. So you could open a corporation and then open an account within your corporation, or you could open a personal account and do personal trading. But options is just another level. So any account, for most of the accounts you can trade stock in, you can also trade options in. So all the major brokerages offer it. Yeah. What was I gonna say now? I'm gonna keep going with these questions, get caught up, and then we'll circle back to that for a quick sec. I don't think my wife watches these, so we're good, guys. And no one's gonna tell her. Not like I get very many views anyway. This is gonna be like 1,000 views maybe? No one cares. No one's gonna tell her. She actually is pretty cool. My wife's super chill. She's super supportive. She'd actually probably be fine with it. Daniel says, do you plan on shorting Hood, and if so, when? So I did do a very defined bearish play, but I'm not shorting it, no. I am, it's possible I could become short it if my bear call vertical spread didn't work out. But no, I don't want to be short Robinhood. I don't want to be short any of these stocks because they're just irrational. Like I had no business being short Newegg. That, a small portion of my account, I can play around with that stuff. Just because, value doesn't line up to fundamentals doesn't mean it won't take 2 years for the market to realize that, right? It can be irrational longer than you can be solvent. So I wouldn't recommend that. Probably better to go look for stuff that's on sale. Like GM was on sale 9% today. And they're a solid car company getting into the EV space too, right? And 10 years from now, they might be at the same place as Tesla. Who knows, right? So there are a lot of their plays that were on sale today. Next question, if I didn't miss it, was, what is your opinion on yield farming in the crypto space? So I'm not an expert on yield farming, but my understanding is that there are opportunities to get involved in some of these shaky, janky ass pools where you can make like 10,000% APY and these paid out in these random alt coins that will be eventually zero, that sound a lot like a Ponzi scheme, but in some ways aren't, in that there's some real value created in many cases. There are some alt cryptocurrencies that the idea is if you get in early and get out early enough, you will make money. That by definition sounds like a Ponzi scheme. If you can get in early enough and get out early enough, what about all the bag holders at the end? A Ponzi scheme is basically you're using new funds you raise to pay out the existing investors, right? However, there are elaborate Ponzi schemes where people raise funds, say 10%, invest it and make 7%, and then the difference that they're short, the 3%, they just use some of the new capital they're raising to pay that out. And eventually it comes crashing down if it doesn't continue to grow. But a lot of these yield farming opportunities carry with them inherent large risks. You can, I guess in theory, you could use stable coins to stake in some of these random altcoins. And if you cashed out very quickly on those on those opportunities, you could make money. Like some of them are like 10,000% APY return. So you get in these alt currencies, you stake for like 2 days, you pull your money out, and you've already made, like if you divide 2,000% out, you can make like 40, 50, 80% in a day. So you go into these alt pools, you stake for a day, you cash out. And you're in for a day, you just made 80% return. And even if the coin's going down, the staking is paying so well that it offsets the fact that the altcoins are going down. So you're basically, the yield farming is basically staking is my understanding of DeFi. But I'm not an expert by any means. I haven't really dipped my toes in much. I know people who are doing it and making great returns. I also know people who are doing it and have lost a lot of money. So you just got to be careful. Anything that's advertising 2,000% APY, or in some cases 10,000 or 100,000%. I've seen 1,000,000% APY. Like literally, you're in it for a day, you made an insane return if the alt currency hasn't crashed while you're in it staking. But you can also stake with stable coins and get paid out in these random alt currencies, which they're paying you nothing. Like it's fugazi basically, right? Unless people believe there's value there, unless the project actually has value. And there's so many different alt currencies. It's hard to say which crypto project is going to, be here in a year or 2 or 3. So the idea would be that if you're going to be doing that and you want to actively manage it, you can make great returns yield farming, but you've got to be cashing out of those alt currencies back into, ETH or Bitcoin, something safe, right? Or even a stable coin. I don't like stable coins. Like USDT and USDC are relatively stable because they're pegged to the US dollar, but in theory they can create as much as they want. And it's not the US dollar. It's trying to be. And so in some ways I don't like USDT and USDC, but I get that they're stable coins. I'd rather be in ETH or Bitcoin. I think that these days it's a safe, gamble to be 10 to 20% of your net worth in cryptocurrency. I'm not there yet, working towards that. My end game would be like, sell some more properties off, get 200-300 ETH tokens, get, like 10 Bitcoin and maybe 20 Bitcoin and just, stake it and get a 6 to 10% return, relatively safe. I believe that long term, like 10 years from now, Bitcoin will be 500,000 a coin and Ethereum will be 15,000 a token, 10,000 super safe. So I think there's huge upside there. That said, can you stomach the fact that ETH might be 1,000 a token and Bitcoin could be 20,000 or 9,000 a token for a period of time? And if you need that money to live and you watch your $1 million turn into 300,000, can you sleep at night? That's the question. So don't put in more into crypto than you're willing to lose. But long term, I think it's the future. And I don't know if it'll be Bitcoin or Ethereum or something else, but I may pivot. If I see 2 years from now there's something else that's better, I might pivot from ETH to ADA or something else, whatever, right? I don't know what's going to be the future, and I can't predict it. No one can. But I think there is a space for crypto, and I love that it's giving the people control. When the government can't, like right now it's getting kind of scary. Like we went through this whole lockdown stuff, and it's possible the government could say, hey, there's an 80% tax on everything you have. We need to raise money to save people. If you're in crypto, they can't touch you. Sorry, I lost my password. I don't know. Like you actually could physically throw it in the river and be like, I have nothing. And someday go back and dig it up and find that ledger, and I'll still have the money on it if you can remember the passwords, right? But no one can take that from you. Whereas now in the banking system, they can freeze your account and seize everything. That's scary. I don't like, as soon as everyone's in a crypto space where the government can't touch it, the government has no power. So once that happens, if that happens, the US dollar is gonna plummet because that's the power behind the US dollar. It's not even gold backed anymore. It's backed by the fact that the US economy is the largest in the world that they can tax. So if at any point they can no longer tax the largest economy in the world and everything's happening in a decentralized finance space, it's it's just, I don't know what'll happen. I think the government probably will intervene. they like having their control and their power. Right now, crypto is such a small space, so I don't know what'll happen. I don't have a crystal ball. I think it's safe to put a little bit in. Don't put like all your net worth into crypto. That's dumb. Don't do that. Don't even put half your net worth probably in crypto. That's probably not safe either, even if you're really bullish like I am. Pricing dictated by volatility. That's a fair comment. Rob says, hey Mike, finally made it live. Really appreciate the weekly content, entertaining and informative. Thanks, Rob. Appreciate the comment. If I missed a comment, by the way, just like repaste it for me. Next one was from James. How are you finding those small drops in stock to large spikes in options premiums? So typically, James, I want to get into a options play where I'm assigned the shares because the shares are more stable. So the worst case scenario is on a down day where it's, overreacting, I'll hold. As long as I'm not getting out of control with my margin, I can afford to hold. So being very careful not to borrow too much, not to play with too much borrowed money. Then you can make a decent return and hold until you're eventually assigned, make all that money on that contract you sold, and then run the options wheel on it, right? So as long as you're careful, then you're okay. I wasn't careful. I've made some ego mistakes. I've even been trading on my phone where like I was in a weird mood or I was tired. I've been up all night and I did some stupid stuff. I've done stupid trades, which have evaporated a lot of profit that I should have had if I just stuck to my own rules. And that's the key, is just having the discipline to stick to your IPS, your investor profile statement that you'll make for yourself that will define the type of risks you're willing to take and what is your risk management strategy and how diversified do you want to be and how many trades do you want to be in, et cetera, and so forth. What strike prices are you writing at? All that kind of stuff. Where do you buy rental properties? So Manny, for the most part, I invested in London, Ontario. I do have some properties in Sarnia, outside of Brockville as well. We have a fourplex and some in Lambton Shores area as well. That's about it. One property in Florida that I invested in as well. Carla says, amen to developing cognitively so vital. Yes, 100%. Need to find rock stars in different fields and learn from them. Manny, that's 100% right. That's a perfect comment. I think that's what every 18-year-old needs to do. They need to find the rock stars in the fields that they're interested in and learn from them. Offer to volunteer for them even. Better than paying. You can even pay them. It's cheaper than the tuition going to Western. But in most cases, volunteering your time is more than enough to get you into the door. Harriet says, am I shadow banned? No, I don't think you're shadow banned. I can see your comments, so I think everyone else can see your comments too. Although on Instagram, I am currently, all of my fans or followers who would often see their story and their top recommended stories can't find me there anymore. I'm limited in the sensitive, they put me into the sensitive content because I shared stuff about COVID and a number of other things that were political in nature. They put me into the viewers may find this offensive, and so they no longer recommend my stories. You have to deliberately go and look for my stories. Even like good buddies of mine that message me daily on the platform have to go out and look for my stories to check them out. They don't show up in their story feed because Instagram is under the, I guess their patch said that they were trying to protect people from sensitive content that they may find offensive. And so my content on Instagram may be offensive. It's not, it's this kind of shit, but like I do talk politics too, right? And so anything that's not aligned to their narrative, obviously they have to please the government because the government regulates them. So of course they're going to side with whatever the government wants. And of course, the owners of the companies have a certain political agendas, and so has to align to that as well. And the companies make the most money and do the best in a vaccinated environment, as an example. So everyone get your vaccine. It's good for the economy, good for everyone. There's no downside risk to telling everyone to get vaccinated. Honestly, there isn't. You really should go get your vaccine. It helps me, makes me safer, less chance of you spreading it to me. But really, if you want, like the argument of like, you should get vaccinated because that's the moral and good thing to do for other humans around you. Like, so is lockdown. Like, don't go to a fucking bar. Stay in and be in your bubble. That's what's good for other people, right? Like, anyway, I don't want to get into this shit here. YouTube's gonna block me probably too, so I don't want that. Sell the AMC and join me. 2+ months now, up $160. Thanks, Mike. All right, William. I often play both sides of it, William. Depending on what the day is like, I will often be bullish on AMC just to ride it when it's a down day. But inevitably, I think that AMC will return to $10 a share. At some point, the intrinsic value will align to market price. However, there is a lot of irrational energy, right? My point, Tony, was just that, going out in public and sharing your germs with people is inherently murderous, right? So people argue like you're killing people by sharing your germs. What if you're carrying, or if you got it from someone at the bar who breathed on you and then you breathed on them, right? Like whatever, like a networking event, hell, a restaurant, pick your poison, anything indoors. If you're outside, it's shown it's a lot less likely to transfer. But when I talk, when you talk, when people talk, how many times I've been at a networking event and someone spit in my mouth by accident? They're talking to me and they spit in my mouth. That feeling is disgusting. I wish that at all networking events, there was mandatory masks. I'm sorry, I don't want to go to another networking event without a mandatory mask. It's disgusting. Even without COVID. Even without COVID. I'll wrap this up soon, don't worry.
Okay, I've got to clean up.
Okay. I gotta wrap this up, seriously, guys. If I missed your question, I'm sorry. I think I got through most of them. I don't have any opinion on Thunder Bay or Timmins area. Higher risk, but better return. Less overall economic diversity and strength. Pakistan. Those are jokes. Nah, I ain't going to Pakistan. 5 wives is too many, man. I'll be honest. I better stop talking now. Recommended 2 times leverage. You can only sustain a drop of 28% in that case. Isn't that way too risky? Is this because you have millions for these credits? Yeah, so Harriet, you'd have to have other means to cover against a margin call, or Harriet, more importantly, have some plays that do well in a recession. So imagine where there's a 20% pullback and say a quarter of your portfolio is shorting the market. So that quarter of your portfolio that's been shorting the market on a 30% drop, that's up 200%. You simply just sell that piece, and that piece would basically cover all of your margin call and more. So if you have a small percentage of your portfolio as insurance with plays that do really well in recessions, you just sell that portion of your portfolio when there's a dip, and you can continue to hold all your positions that are down because a quarter of your portfolio just doubled in value, and that covers your margin call. If you liquidated